Watching Business Nigeria, of course, the Nigeria quarterly real gross domestic product growth dipped to 2.25% in the third quarter of 2022 from 3.54% in the second quarter. This growth decline reflects the diverse headwinds such as macroeconomic instability, heightening inflationary pressures, currency depreciation, foreign exchange illiquidity, surging energy costs, weakening purchasing power, legacy structural constraints, lingering insecurity, and crippling trade facilitation issues that have been bedeviling the Nigerian economy. However, the economy, which is dominated by the non-oil sector, contributed 94.34% to the nation's GDP in the period under review, while the oil sector contributed 5.66% from 6.33% in the preceding quarter. Joining me now live as we take a critical assessment of the sectoral performance of the economy in the third quarter of 2023 is an investment strategy manager at AfriInvest Assets Management Limited, Temitope Omosui. Thank you very much for joining us at this point.
Thank you for having me.
All right, so to start with now, what is your overall assessment of the 3 quarters GDP report in light of the current economic indices?
Well, a positive growth, 2.4%, that's quite applaudable. But when you look at the impact on people, because that is the end of every macro indicator or every economic policy, if people cannot feel the impact, then it's not, we don't need to bother about the indicators.
So what's positive about the growth?
So then the positive part of the growth is that the fact that it is positive. So not necessarily
if it's not impacting on the lives of the people.
So actually, the impact is not really evident on people, because if you look at inflation and look at economic activities, particularly the sectoral performance, it's quite clear that the growth is not inclusive. And as a matter of fact, for Nigeria to have an inclusive growth, we need, over 8% economic growth, because prior to 2015, we had growth of over 7, 8%, and 9%. And those periods were accompanied with low unemployment, because if growth is not accompanied with low unemployment as a reflection of welfare of people, then we can't say that, yes, the growth is inclusive, even if it's above population growth of, say, 2.6%. So with the current 2.4% is very, very disturbing, particularly if you look at it on quarter-on-quarter basis, because whenever you want to analyze economic variable or macro variables, they are usually good. You get more insight when you look at it from the short-term analysis, particularly, say, if you're looking at inflation, you look at month-on-month, and you're looking at GDP, you look at quarter-on-quarter, but year-on-year would have, just cover a lot of, things that you would not see at glance. So I'm sure as we go on, some of my presentations will show how the performance is actually abysmal on quarter-on-quarter basis, and what it means for Q4 and the other, growth outlook, even for 2023.
So how will it impact on Q4?
So definitely, if you look at, the quarterly performance, you will observe that there's a very noticeable pattern across, across all quarters. For instance, if you look at Q1, growth are usually around 14% negative on quarter-on-quarter basis. In fact, if you do the analysis for over 10 years, it's more like the numbers are not even, they are not surveyed, because you can trace a pattern. So the presentation is up there. If you look at the second slide, the other one, the previous one, you will notice that growth in first quarter is usually, the first quarter. One. Yes, the second chart there, you will notice that the first quarter growth is usually around negative 14%, and which is the red line, while the second one is the second quarter, where you have just a bit of growth on quarter-on-quarter basis, but the best growth is usually recorded in third quarter. So we have seen third quarter when proud to this third quarter that we saw that growth is just about 9.7% on quarter-on-quarter basis. Previous quarters, for instance, in 2020, where we had to grapple with COVID-19, quarter-on-quarter growth was over 12%. Last year, as a result of oil price recovery, we saw over 11% growth. And now this year, quarter-on-quarter growth for, we saw just 9.7% thereabouts. So if you can see that the trend is going downward from 12 in 2020 to about 11 in 2021, and 9% in 2022. So you can easily predict that third quarter growth, because the best growth is usually in the third quarter. So you can predict that fourth quarter growth could come it could come to about, say, 6%, 7%. And do you know the sad part is that if we get about 6% growth on quarter-on-quarter basis for third quarter, that could amount to a GDP growth for the year less than 2%. I know this is quite strange because I'm sure you must have seen a lot of forecasts out there that GDP should end at 3% this year from the IMF, over 3% and all that. But this is clearly showing what will affect GDP because it's easily predictable. So even if we do 6%, I mean on quarter basis, if you extrapolate that, use that to compute what we have for this year, GDP growth for 2022 may not be up to 2%. In fact, the best you can get this year with that analysis is about 2%. And a 2% growth, is not good for we need all the growth. I talk about inclusive growth of over 6, 7, 8%. And we're coming from last year when growth was over 3%. So a 2% growth this year is not so good. And, though we may have seen some positive, policies, out there, but then we saw major, in fact, so far in Q4, we've seen significant shocks in the economy, ranging from the fact that for the first time in a while, oil production declined below 1 million barrel per day this quarter. And the same quarter, we also saw, significant shocks to exchange rates. We also saw, high level of inflation. All of the factors that impeded growth in Q3 are still very potent in Q4. So you can be rest assured that if, I doubt if there's anything we can do because we have just 1 month to the end of the year. So for Q4, you should expect growth of less than, say, 3%. And for the year, growth could be around 2%. That is even the best case scenario. And, if we don't address all of these problems with other uncertainties affecting the economy, next year, is quite gloomy.
All right, so but despite the slowing growth rate now, the CBN governor believes that the Nigerian economy will record a growth of about 3.47% by the end of the year. Are you optimistic about that?
I'm quite pessimistic, and the figures are there. I've mentioned the pattern of growth, talking about the fact that the best should have come in Q3. You can trace Nigerian growth, go to as far back as even 2010. The best growth usually come in Q3. So if the best we could have done is this 2.4%, and for you to even achieve 3.3%, Q4 growth must be as high as 3.6%. We were not able to achieve 2.4. We were not able to achieve 3% in Q3. So how do we achieve 3.6 that will give us over 3% growth for 2022? So that is actually very unrealistic if you look at the current macroeconomic condition.
What do we need to put in place to achieve, according to CBN governor, a 3.47 growth?
I think there's nothing we can do, to be candid. Right now, maybe we should begin to plan for what the kind of growth, the level of growth we want to see in 2023. But for 2022, growth is slow growth or suboptimal growth is settled. It's settled because if you look at what the factors that drove growth from the oil to the non-oil sector, the factors that are affecting the oil sector are still there, particularly the oil production. We've talked about how significant, high level of oil theft have impeded growth. And recently, I think on social media, it was put on the CBN website, on CBN Twitter handle, that there was no, for the last, maybe a couple of months now, there has not been any money, any oil inflows into the reserves. That is, that's a clear evidence of what is affecting the oil sector. And the oil sector has been in recession since 2020. Even though we know that, yes, the oil sector just accounts for less than 5% of the GDP, but in terms of impact, contribution is different from impact. True. In terms of impact, it is quite consequential. It has significant impact on the economy. For instance, services sector is the largest share of the Nigerian economy, over 50%. And within that space, you have financial sector. Financial sector, if you look at credit to private sector from financial sector, about 25% of those credit go to the oil sector. So what does that mean? It means if there's a problem in the oil sector, the financial sector will be negatively impacted, and that will affect the non-oil sector. So despite the fact that oil sector accounts for less than 5%, the non-oil sector that account for over 90% depend heavily on oil sector to survive. So any problem in the non-oil sector will have a very negative impact on the non-oil sector.
And that's critical to our economy.
Exactly.
Wow. So let's take a critical look at the GDP report that shows that the economy was dominated by a non-oil sector, which contributed 94.34% into the nation's GDP in quarter three. Despite the volatile operating environment, the non-oil sector keeps performing well. What do you think is responsible for the growth trajectory?
So I would say that, we have, in terms of the broadest classification of the Nigerian economy, we have over 40 subsectors. However, if you look at the components of the non-oil sector, you will notice that the major drivers, the labor-intensive sectors that will add significant value to the economy, are slowing down in terms of growth. So when we say that the non-oil sector is performing, increase in contribution does not mean you are performing well.
Okay.
For instance, you have two people, 100 and 100. So if there's a major reduction, on one person's income or something, and the other person is still the same, or the person just declines slightly, you think that the other person is performing well because the first person has gotten a significant decline. So that is a case of our growth situation in Nigeria. Non-oil sector is contributing more to GDP. Does not mean that non-oil sector is performing optimally. For instance, let's look at the components of the non-oil sector. If you look at the services sector, apart from the telecommunication sector that seems to have performed somewhat, you will see that the growth in other areas of the non-oil sector, other areas are not so buoyant.
Okay.
They are not so buoyant. Manufacturing sector for the first time is in negative as a result of FS challenges, because they are not able to sufficiently import raw materials, and they have to also grapple with insecurity locally. So when we look at it, the GDP growth is not all about the fact that non-oil sector is performing well. In fact, virtually all the sectors of the economy are not performing optimally because of the macro challenges. So we cannot say that, yes, non-oil sector is performing well. Similar to what is happening to government revenue. You would think that because prior to 2020, the major contributor to Nigerian government revenue is oil, right? But the trajectory has actually changed. It is not because non-oil sector is not contributing more. It's because oil sector is declining. Because if one is declining, automatically this one looks good. No, it's not so. We need a balanced economy, a balanced growth. A balanced growth is a growth where you have major sectors of the economy doing well. Oil sector is buoyant, non-oil sector is buoyant. That is what every economy needs. Advanced economists don't joke with all sectors of the economy. There's no gain in having some sectors of the economy declining and other ones performing well. There's no even in oil sector. Beyond the fact that the Nigerian economy is heavily dependent on it, we need a balanced growth such that the oil sector is very strong in terms of growth, and the non-oil sector is also extremely buoyant.
So let's look at the non-oil sector, other parts of that sector now. Information and communications, trade, transportation, and some other sectors. Non-oil sector are said to be growing at a stellar rate, that they're growing very well. I'm just saying it despite the oil sector going down, as you have said. But what do you think must have driven this growth, irrespective of the fact that you believe that the oil sector, the oil revenues are going down? What do you think might have driven this growth in this year?
So, for instance, if you look at telecommunication sector, the digitization in the economy is actually supporting the sector, ranging from MTN and Airtel that are putting out their 5Gs, and we've also seen that different sectors of the economy, are also embracing technology to actually enhance operations. So for telecommunication sector, the growth seems buoyant, and thankfully, it's as a result of the liberalization of the telecommunication sector that we saw some decade ago. So, and if you look at other sectors within the non-oil sector, for instance, trade also performed substantially well, about over 7% or so. This, one could actually attribute this to the fact that, trading activities is usually resilient. You have to, it's just like saying that when you don't have money, you must consume. Consumption is certain. Trading activity is certain. The only time we had, that trading activity was a bit halted was in 2020 when there was no movement.
Pandemic.
Yes, so regardless of even the high cost of doing business, high cost of living, people must trade. you must move across state. You must buy your necessity. And if you also look at agricultural sector, as a very important, subsector under the non-oil sector, it contributes over 20%. The major factor that drove agricultural sector is crop production, because it even accounts for over 80% of that sector. And it actually does well because you and I must eat. So farmers would find a way to survive even amidst the current, challenges of insecurity and the flooding that have disrupted, farming activities. So this sector, so you can say that even if any sector currently, non-oil sector is doing about 10%, you can be rest assured that if all these macroeconomic challenges are addressed, they could do as much as 15, 20, and 30%. And you also saw that transport sector also did well despite, the insecurity, because a number of people are now fearful to move across state. But the sector still did well because people must survive. There has to be movement across state, inter and intrastate. So these are also contributing, and even the aviation sector as well, is picking up as a result after the what we saw during COVID-19. So all of this, and the rail system as well, even though we saw that there was a bit of issue with the Kaduna and Abuja rail system, but we are seeing a bit of traction in these sectors. However, sectors that are not so flexible, or that in terms of adjusting prices. For instance, manufacturing sector, I mentioned that it declined and is a very important component of non-oil sector. Other sector that I've mentioned earlier is because in economics, there's something we explain or we talk about in terms of elasticity. You will see that those sectors, in terms of your demand for goods in those sectors, you are inelastic. That is, you must buy. Even if you don't have money, you must come to the office today. They are necessary. You must come to the office today. Even if you don't have money, you have to eat. But for manufacturing sector, you know that some of the goods produced by manufacturing sector are high-end. So you can actually do away with some of them, adjust your...
Some of them can be planned for long term.
You can actually adjust your spending in the reality of your income and the fact that other things are more expensive. Focus on necessity and do away with luxury. And you know that most luxuries are from the manufacturing sector, which is why we see that, some sector in the non-oil sector are doing fantastically well. We talk about transport, we talk about agriculture, we talk about telecommunication, right? And but for manufacturing sector, it's actually grappling with macro challenges because the sector is not as flexible, it's not as resilient as the other sector I've mentioned earlier.
Now, you mentioned flooding in the agricultural sector, irrespective of the fact that in the hinterlands we have insecurity, definitely in some parts of the nation where agriculture is rife, followed by flooding. The sector seems to have been doing well in this year. What do you think might have been responsible for this?
So for agricultural sector has been doing quite well, right? But I think we should look at it beyond just the fact that the sector is staying afloat in terms of growth. And as a matter of fact, agriculture sector still accounts for over 20% of Nigeria's GDP. That is not good. We want increase in productivities across all sectors of the economy, not just agricultural sector. We want a vibrant agricultural sector. Like I said, why agricultural sector will continue to do well, and in fact, it did well in 2020, despite the, outbreak and restrictions to movement, because people, have to eat, and, the sector is very essential. In fact, you would observe that during the COVID-19, government had to relax some restriction on movement of food and essential items. You see that most of these things are within the agro space. So I think, regardless of what is happening, agriculture sector is still doing well, maybe not optimal. However, the structure of the Nigerian economy, we should not over-celebrate agriculture sector. That does not mean we should relegate it to, we should relegate agriculture sector because it's very critical, because one of the major challenges in Nigeria is rising food inflation. Is a major component of the headline inflation. Over 20% now, headline inflation is a result of what? Poor performance of the agricultural sector. So that can even be a scorecard. we can see that's the scorecard. Despite the fact that agricultural sector is growing by about 1-2%, food inflation is still as high as over 16-17%, and headline inflation. So that tells you that the yardstick is the food inflation and inflation, which means agricultural sector is not performing optimally. And one could also link it to other sectors of the economy, infrastructure. You talk about other sectors of the economy basically that are not striving because they have spillover effect on agricultural sector and lingering problems beyond the flooding we talk about, insecurity. But I have to mention why we have to begin to look at clamoring for, a buoyant, yes, we need a buoyant agricultural sector, but I think it's not a commonplace in 21st century for agricultural sector to account for the major share of your economy. For instance, if you look at the illustration we have there, you will see that for other economies, for instance, China, you observe that agricultural sector is less than 7%. In South Africa, you have it lower. In India, you also have it lower. And these economies are growing faster than Nigeria. Right. So that actually speaks volume that in as much as we are looking at a vibrant agricultural sector, we also have to look at other sectors of the economy. How do we enhance the productivity of the service industry? How do we industrialize the Nigerian economy? Because industry is still lower than 20%.
Quite far lower.
So, which actually speaks to the fact that the Nigerian economy is not so industrialized. So, which is why, and people also talk about the fact that the Nigerian economy is still largely primitive and highly susceptible to, what is happening internationally in terms of shocks and, oil price movement and a number of other exigencies.
So, how do we curb inflation? You've mentioned the fact that we're trying to grapple with the economic situation, so it leads to high-level inflation in different sectors of the economy. What can the CBN do to tighten its monetary policy instruments to curb inflation? So,
for inflation, we understand that there are different factors that affect inflation in Nigeria. Okay. Very unique to Nigeria, because for you to address a macro problem, you have to look at the causes. So, if you break down inflation component, there is the monetary part where money supply, increase in money supply above productivity is affecting inflation. And there's also a part where we talk about infrastructure affecting inflation. And we also talk about, food inflation being a major, component of the CPI basket. It accounts for over 50%. Food, both imported food, beverage, they account for over 50%. So how do we, from the monetary policy side, we know that it is important for us to begin to work on reduce money supply. So it's not all about increasing interest rate. We've seen series of increase in monetary policy rates in recent times so as to address, inflation through exchange rate, exchange rate mechanism. But then exchange rate at the parallel market is still well over 700, which means that the interest rate increase has not really impacted, exchange rate, exchange rate volatility, because you cannot remove the impact of exchange rate from inflation, particularly through imported food inflation and other items. So money supply must be addressed beyond just increasing interest rate. For instance, if you look at government ways and means, it's well over 24 trillion. Okay. That means as the CBN is increasing interest rate on the one hand, money supply to the economy is also increased on the other hand. And if you also look at other factors affecting food, you talk about, infrastructure. What are we doing about infrastructure in Nigeria? And what factors are affecting infrastructure? Because if you don't have access to good electricity, if road network is not good, if it costs you, like if you produce a tuber of yam in Kano, it costs you 500 naira, and it will cost you additional 1,000 naira to bring it to Lagos because of you have to pay some people on the road because of the delays and all of that.
And the bad roads.
Inflation, it's not even a rocket science. You know that prices of items will go up. So we have to address infrastructure. That is from the fiscal side. From the monetary side, we can only address money supply, not just by increasing interest rate, but deliberate attempt to address, a money supply. And from the fiscal side, I've mentioned how we have to work on infrastructure, electricity, and how we have to work on our roads, and particularly if insecurity. A number of farmers have even left their farmland because of insecurity. And, how do we bring that back? Monetary policy cannot address all of those insecurity. Government has to continue to look at how to address insecurity. And one of the major drivers of insecurity in Nigeria is poverty. And if you look at the recent report by the MBS on distribution of poverty in Nigeria, you see that it's highly concentrated in the north. So there has to be a major revolution against poverty in the north. There has to be a major revolution. So when poverty is tackled, you tackle insecurity, and from there, you will be able to keep your infrastructure. For instance, if there's insecurity and you build a good road, people will destroy it. True. If you build a good hospital, people will destroy it. If you build a good rail system, people will destroy it. Okay. So there's no need to spend money on infrastructure sometimes when you know that it will be destroyed. Look at the Kaduna and Abuja rail system. Yeah. Nobody can use it again confidently because of the insecurity. So put more money in infrastructure, you end up not achieving anything if insecurity is not addressed.
A quick one now. Do you see the oil sector gaining momentum in Q4 2022?
I don't see that happening.
But despite the fact that we're finding oil in the northern part.
that is a long-term game.
Okay.
But for now, let's even talk about 2020. We are not seeing a major traction yet. Different factors are affecting the sector, ranging from the fact that what is the condition of our business environment? Is it attractive to foreign investors? We have to look at that, and we have to look at the concerns of the people in the the oil region, and among other factors. We have to begin to look at that, and I think I should emphasize that we have to make the Nigeria, investment climate attractive for foreign investors. We actually thought that the revolution in the oil and gas sector, in terms of the PIB and all of that, the transformation would have led to a major, a major transformation in the sector. But because, Nigeria does not have a problem of debt of policy or program, the problem is the action that follows all programs and policy. So for now, I know that, yes, we have all the policies, programs, there for us to, revitalize the economy. But what is lacking, what we don't have is, or what we are not so committed to, is the action. We have to make actionable plans,
deliberate
policy, and we also follow through in terms of implementation. Not just implementation, we have to evaluate to see that, to assess our success in terms of, objective, measure objective to see that have you achieved your objective vis-a-vis, the current reality.
All right. Investment Strategy Manager at Afri Invest Asset Management Limited, Temitope Amosui. Thank you so much for talking to us.
You're welcome.
It was an interesting conversation. Thank you.
Yeah.